Kyle is one of a few investors who famously made a fortune from the 2008 financial crisis. And he's pretty cautious about the current economic outlook too, both in terms of China's slowdown, but also that the US is heading for recession. Listen in.
It's not only me, it's the bond market. Look at where U.S. 10-year rates are, right? They were as high as 3.25, and today they're in the 260s. And they actually hit a new low in the last week, while the stock market's been rallying, since the beginning of the year. So I think if you look around the world and you see what's happening in Southeast Asia, whether you're looking at China, Korea, or the Philippines, or any of these areas in Southeast Asia, you're seeing year-over-year export numbers down double digits. You're seeing China down 20%. You're seeing Korea down 11%. You're seeing Japan's new machine tool orders are down 29% year-over-year. So we're seeing a real slowdown emanating from Southeast Asia and rippling across Europe. Italy's in a recession. Germany's subcomponents of their industrial production look so bad that for me, I just can't believe that the U.S. can continue to grow in the face of, let's say, a slowing globe. The exact opposite's been true, since 2009 with respect to China hitting the gas pedal and levering itself to, let's say, drag the world out of the global financial crisis. Now you have a scenario where China's dramatically slowing down, and so is the rest of their trading partners in Southeast Asia.
You started by making a comparison between what the bond market's saying right now and what equity markets are saying. Are you suggesting actually that we should be lower here for stock markets too?
I think so. I think the bond markets, I would say, get it right 9 out of 10 times, and the stock market ends up following later on. And so the bond market seems to me, the global bond markets seem to me to have this right, and the equity markets have had a bounce after their December heart attack, and I think we're going to see equities moderate going in. Let's just say sometime around now until the end of 2019. I don't think it's going to be a big